Hello guys, thanks for joining. My name is Dario, and today we're gonna go through a couple of articles and what they could mean for the future, for catalysts, for the stock market and the economy in general. Right, let's have a look. Russia and China will develop shared financial structures to enable them to deepen economic ties in a way that foreign states will be unable to influence. The Kremlin has announced following talks between the country's leaders. Now, if we go further down, it says the move appears to be a response to a series of warnings that the Western nations could disconnect Russia from the Brussels-based SWIFT financial system as a form of sanctions. So obviously Russia and China are trying to get financial independence from the whole Western system, as the risk of sanctions if they proceed with sort of a war, say Russia with Ukraine or China with Taiwan, which is probably what they want to try to achieve. And so these could be possible catalysts to look in the future. And then obviously we got the news of the Bank of England increasing the base rate interest rates to 0.25. The Federal Reserve talked yesterday, Central Bank of America, and saying that they will start increasing the taper, the asset purchase program, to try and end it beginning of 2022, and then we're looking at increases in rates, possibly 3 of them in 2022. And then the ECB also came out keeping the rates the same, just decreasing faster the asset purchase program, and looking at increasing rates 2024. Right, so we've seen a lot of stock market rallying in 2021, thanks to the stimulus and the asset purchasing and the decrease in the rates. Obviously now we're seeing a possible reverse in this, and we got to consider that this is due of the high inflation. We see 6.8% inflation in the USA. We see over 5% in the UK, and an average of 5% in the Eurozone. So this is unprecedented high inflation that, if you think about it, I mean, if it was calculated properly like it used to be in the 80s, you know, how they calculate the CPI would probably show that we're heading towards hyperinflation, really. So I think this move from the central banks is more political. I mean, because the increases are so little that they're not really gonna help that much inflation. Also, we got to see that if something were to happen between, say, China and Taiwan, and you know, they had problems because of going to war, say for example with Taiwan, and we already have supply chain issues where which is one of the causes of inflation. So you know, this could even worsen. So we'll have to see. 2022 is definitely going to be an interesting year, and yeah, a lot of things to look out to. Obviously, I'm being careful investing in the stock market right now, because you might get 10-15% for a year, and then for another year again 10-15%. But let's be honest, look at the upside and the downside. I mean, the downside is, you know, that in the next 1, 2, 3 years we have a 30-40%, 50% even stock market correction is possible. So you got to weigh out the options there. Always have a bit of cash on the sidelines. Anyway, this is not financial advice. I'm not a financial advisor. This is just my opinion and what I'm doing. Hope this video helps, and see you in the next one.